Hey, how's it going, fellow investors? Dennis here, and today we are going to be going through my dividend investing portfolio. We're going to see how it's doing, break some stuff down from like the last couple of weeks, maybe even look at the last quarter or two, and kind of, see where we are with the portfolio as a whole. So we're going to jump over here onto, actually, let's go into the smaller one here. And we're going to kind of take a look at this. Now, before we get into this, I'm kind of excited. If you are somebody who's been watching some of these videos for a while, or maybe you're somebody who's new to my channel but has been watching some investing videos, I actually put together a free beginner's guide for utilizing M1 Finance, which is the main app I use here. So I put together all of my videos where it will really help you get a good understanding of how to set an account up like I do, as well as being able to, understand like different parts of the app and how it all functions and stuff like that too. So I'm going to have that link for you in the show notes down below. If you want to check it out, it is completely free. There's nothing that I charge. I even give away my dividend investing or my dividend tracker as well throughout that email list that you'll get. But the biggest thing is that I'm really excited for people to kind of go through this process, actually learn how to use an app, and then really get their investing started. So again, if you want to check it out, link will be in the show notes. It does help support out the channel going through all of that because obviously everything I do here is pretty much free for you guys. Actually, it is free. It's not pretty much. It just is free. So let's take a look and see how my portfolio is doing. So it's been a little bit of time since I've actually updated you guys, but some really big things with this portfolio here is that I've actually started putting in even more than I have been in the past, and that comes with increasing my knowledge on investing as well as a few other things. So you can see here my current portfolio is sitting at $32,588. If we kind of just look at the time markers here, the last day, we were down $34. If we go to the week, we're actually up $360 pretty much. If we go to the month, we're actually up almost $2,100. Now, I definitely don't claim to be some kind of investing expert or guru, anything like that. I am just investing for the long term, researching my companies that I look into. Sometimes I kind of divulge a little bit of the information here on the videos. And then sometimes, I do a little bit of the back end work on my own, usually like in the middle of the night. Let's see here. Last quarter, up about still 2,100 because there was obviously some dips over the last quarter. And then the last year, we're up almost $6,000. Now, for anybody who's like, seeing this and being like, whoa, that's a lot of money, I always preface this. If I go back to my all-time here and I go all the way down here, check this out. I started off this account with $100. It says 109, but that was whatever. It's $100 is what I actually put into this account, and I just started putting small amounts in every single week until I got more comfortable, and then I started throwing in more and more, and now we're sitting at this. And the cool thing is I have a lot of people in my M1 Finance group that actually pretty much say the same thing, that they start off with a small amount, and then you could just see their account starting to grow, and if they didn't start it, they wouldn't be where they are today. So I absolutely love it. So we could take a look here and see. Let's go to the last quarter and let's see how we are doing with all of our slices. So obviously right over here, I'm just partially cutting some of this off, but you can see all the slices, all these different groups that I put. I have like a tech, growth, retail, all of these different things. You can see the growth that they've had. I try to ignore the percentages here personally, and I just focus in on the gains right over here. That's more of what I care about because the percentages are kind of wacky on money weighted returns, just kind of FYI. Which also too, by the way, if you guys do end up clicking that free beginner's guide for using M1 Finance, I will teach you how to actually set this up. Granted, it's a little bit of an older video, but it still gets the job done to make sure your portfolio looks something like this if that's what you end up liking to have. So let's take a look and see our activities here, because this has been really fun for me. I've gotten to a point where I can start investing more into my portfolio. Granted, the last deposit I did was only $125, which is still a lot for myself and a lot of other people. You can see here I did a deposit for over $700, which was actually one of the largest deposits I've ever actually had, which is really cool. So in case you don't know, M1 Finance does it where you make a deposit and then it splits your money up based off of percentages. All that is in the trading videos, by the way. And you'll see here how everything's kind of broken down. So some of these stocks, got a little bit of money. Like you can see, where was it? Like AbbVie got only $19, but then we had like companies like Tesla got 51, Amazon got 48, Airbnb got like 50, which, by the way, I do know, in case you're new to this channel, even though my portfolio is dividend focused, some of these companies I have are not dividend focused, at least not yet, and maybe in the future they will. I've talked about it previously, but anyways, so it's just really exciting to see, $74 going into Microsoft, $40 going into Home Depot all at once, with a whole bunch of other stocks getting a really healthy amount of deposits. Because right here you can see it bought into 17 different stocks, where in my holdings over here I have a total of 24. Now I used to have a lot, and I've talked about this before, where for me, I ended up having, I don't know, it was like 44 stocks, and it was just so hard to keep track of a lot of stuff, and just not really wanting to pay attention to everything. So I lowered down the amount of positions I held. It was actually really tough to sell. Let me know in the comments down below if you've had to sell stocks before and it was a very difficult decision on, which stock to actually end up getting rid of. But the 24 that I hold now, I feel very confident with these companies. I am planning on holding them for long term. There might be one which is, I don't know which one it was. There is one that I'm really debating on, still a little long term, if I want to keep it there. But some of the companies, like I said, don't pay out dividends, but in the future they could. And we've talked about it where, companies like Apple never used to pay out dividends, and well, they didn't pay out dividends for a long time, and then they started popping them out. And if you had stocks, years ago, not only did you get the amazing growth, but then now you start getting paid these dividends with a really good yield on cost, which is effectively your yield on those dividends are probably better than whoever's buying the dividend now, because you were buying them at a much better price point. So it's a really, really cool thing. So unrealized gains right here is about 5,089. The reason this number is different than my all-time on the money weighted return is actually because that stuff accounts for dividends, also accounts for any stocks that I sold for a profit. That money is still kind of showing there to kind of show you, hey, this is everything you've ever earned ever, whether you sold it, kept it, or earned dividends. So I kind of like that personally as well too. Now, we're going to keep going here. You can see I did a withdrawal for about 5,000. That wasn't actually from my investment. That was with M1 Borrow. If you're not familiar with that, it just essentially lets you borrow against your portfolio. So I ended up doing that. So you can see here, I also did an $800 deposit, which was the 20 buys over here. So I told you more recently I've had the opportunity to be able to invest a little bit more. And again, I try to tell people don't get discouraged, because before I go into that one, I'm going to show you here. My initial deposit, like I told you, $100. And then check this out. $20 deposit, $10, $10, $10, $10, right? And I can even keep going here. So like June of 2019, $10, $10, $10, 10, 10, 10. And then I think I started in like August. Yeah, I started bumping it up to like $20 every single week. And it just kind of kept growing slowly but surely. And the reason I do that, and the reason I want to show it, is just because to me, I think it's important to not just show where I am today, but to show where I was, yesterday or the year before. Because if you guys are following along, which of course you guys can be hitting the subscribe button, but if you're following along, in 2 years, we're obviously going to be at a bigger position. So I want to make sure people understand that it's okay to start off smaller and you can still grow your money, because if you didn't have any money getting in, you're not going to have any growth for sure. And the cool thing with M1 Finance, in case you haven't realized it already, is you don't have to buy full shares of companies. If you only have $100, you just put in $100 and it'll split it up through what they call fractional shares. And it's a beautiful, beautiful thing. So if we go into this trade over here, this one was obviously actually my highest one. So I thought the other one was the 800, but that one was 7. This one's 800. So you can see I had a low of like 416. And then we had like Airbnb. I actually put in $100 directly into that one, because the stock price on that has gone down a lot. And actually, if I can remember, I want to talk about that a little bit. Because so that one, what they call dollar cost averaging, or DCA, because the stock has gone down lower than what I originally paid, I'm actually trying to lower my average cost. That way, when the stock goes back up, then hopefully, we'll be getting all those nice gains. We're getting like $58 into Texas Instrument. Ross got 55. Discover got 21. Ally got 35. Apple got $108. Like, it's really cool to be able to do this. But, considering the fact that when I first got started, putting in $10 a week, obviously not a lot was going into these companies. And it was spreading the deposits into multiple stocks, where now that if I can put $800 in, you can see it's splitting between 20 stocks out of my 24. So only 4 companies weren't getting anything from this deposit, which if I wanted to, I can manually have bought into them. But I just let M1 Finance kind of do most of its thing except for Airbnb. But everything else is just like, it's just more starting to go into them, and it's cool. But like I said, starting off with $10, I only had 3 stocks at the beginning. So the split was a little bit easier, but this was really nice to see something like this, because it's something that built up over time. It didn't just happen overnight, as you saw there over at this point 2 years and like 4 months. So that's really, really nice. But let me show you guys, before we go into the holdings and how all of them are doing, I want to show you guys something that that I find very interesting. So what we're gonna actually do here is go into, like, let's say Microsoft, for example. Actually, I haven't done anything like this yet, so I just want to kind of take a look here. So if we go over the last year with Microsoft as an example, let me make sure things are looking good on the screen here. So what happens is that, right now Microsoft is at an all-time high pretty much. So its all-time high is 263 and we're at 261. So we're practically there, right? We're pretty much at the peak at which it has sold for. Now, a lot of times people fear that. A lot of other times, most beginner investors are like, well, I'm going to invest in it now because it's doing so well. So, the stock kind of is fluctuating and stuff. But what ends up happening is sometimes when people buy into a new stock, especially at its all-time high, there's a good probability that it might go down. And it might go down, I don't want to say significantly, but at a good amount of percentage based off of its high. So for a lot of people, that can be very fearful and scary, because you put in $100, $1,000, $10,000, whatever amount, and then you just see your money kind of go away for the most part. But I want to show people this all the time. It happens all the time. So with like Microsoft as an example, we had a peak right over here. Oops, let me actually kind of draw an arrow. So we had a peak right over here. What was this? This was 231, let's just say. But then you can see here it dropped as low as 200. So it went down $30+. And for a lot of people, that's a huge drop. And so if you look at it, even peaking up here and going over here, it still never hit that 231 all the way over here. Not until, when is this? Not until January 6th or 26th. So let me draw an arrow here. So I'm just gonna draw a little arrow right there. I think that's where it was, right? Were we there? Yeah, give or take. Okay, so let's just say January 26th. So it peaked at September 2nd. So September, October, November. Hold on. October, November, December, January. So about, what is that? 3.5 months, considering dates and everything. I don't want to be exact, but just about 3.5 months. So, for a lot of investors, I think, especially new investors, and the way the market is, and the way all these investing people on YouTube and all these other platforms are talking about stocks, people get really excited, and then they want to just invest their money and then expect 30-40% returns instantaneously. I don't think people realize how uncommon that really should be when it comes to investing. So when you're investing, you should be thinking long term. You shouldn't think oh, well, this stock isn't going anywhere, I'm just going to sell it. Where you can see here, for a pretty solid stock like Microsoft to have hit a peak and then go down and then stay down for about 3.5 months, that's not an uncommon thing to have happened to the stock. Sometimes it could be even longer. It could be 6 months. Sometimes it could be a year or two before you really see that happen. And that could be scary for a lot of people. So let's break this further. So you can kind of see a few other ones as well too. I mean, there's obviously the early 2020 stuff, so we're not going to worry about that. But you can see here in, what is this? December 13, 2018, it hit 109. And then, where it was 109? It's right there. It's about mid-February for it to come back. So that's a couple months, and that's not as bad, but sometimes it could be much, much longer time periods in between that. But as you can see, consistently goes up over time. Now, obviously, Microsoft is a little bit more consistent than some of these other companies. But I mentioned earlier that Airbnb, I've been buying a decent amount from recently. So they don't really have, I don't even think they have a whole year yet. No. Okay, so this is actually the whole lifetime of Airbnb as an example. So since I'm buying more into them, you can see they started off at 144. They peaked at 216, or I guess 219. You can see right here they kind of peaked at 219. But then right now they're at 177. So, obviously they don't have a lot of history, so it's a much higher risk. But seeing that it's a small portion of my portfolio, I'm willing to take a little bit more of that risk for the long-term possibilities that the stock will go up. And then you guys can see the opportunities over time if that's going to end up being the case. So, I'm buying here, like when it dropped to 170, 169, I was buying into that at the same time. What's another company that I've been doing that with? Lockheed Martin. So now, before we continue on, if you are somebody who needs to refinance their student loans because maybe you are paying a little too much in your interest, check out my friends Ernest. I'll have a link for them in the show notes down below. They will help you refinance your student loans entirely for free. And it takes only about 2 minutes to check out your rates and can honestly save you thousands of dollars. And you can use that money to invest more into the stock market or extra money into your pocket every single month. And again, I'll have that link in the show notes down below so you can go ahead and refinance your student loans. I did this with Lockheed Martin a couple months ago. And you could really see this. This is actually an even better example. So Lockheed Martin peaked at 409 over the last year, which I think was June of 2020. And then it's dropped all the way down to 319, kind of went back up a little bit. And then it just had this like steady decline over like the winter, like really big decline. So I just kept buying more and more into them. And then they went all the way back up to 391. And now they're kind of dipping a little bit again too. But if you look at their history, you can see that this is 5 years. You can see ups and downs. And then same thing here. These are just smaller amounts. Obviously, it's gotten pretty crazy right over here in this time period. Pretty much anything in like 2018, 2019, 2020, 2021, a lot of the stuff in the market has been a lot more volatile, I would say. I don't know about a lot of other people, but experiencing 5-10% changes in stock sometimes per day seems pretty radical, where a 1 to 2% shift in a day was a couple of years ago was kind of like, whoa, that's a big move. So things have definitely changed a little bit. So I think it's very important to be very aware of like the market and stuff. Let me go back in here because I don't want this to log out. So I just kind of wanted to show that here with like Lockheed Martin, Airbnb, and kind of give you guys some examples to maybe help you understand a little bit more of like if you're going to invest in a company and they go down for a little bit, but you believe in that company, you wanted to put money into them to begin with because 5 years from now they're going to be better than they are today. Don't worry about it going down. If anything, when it goes down, just buy more. So I'll show you real quick before we go into the holdings. If we go to my real estate, right over here. So this is where I keep Airbnb. So right over here with Airbnb, in the lifetime that I've held it, if I sold today with everything, I'm actually going to be down $90. But I'm not selling, so I'm not at a loss. This is what they call unrealized gains, but it's obviously an unrealized loss right now. So you can see here, the current price of Airbnb is $177. We kind of saw that earlier. I have, on average, with all the shares that I've been buying over the last couple of weeks, have an average share price of $188. So currently, if I buy more into the stock, my average share price goes down. So it actually helps me out when the stock hopefully goes back up, because I believe that the stock is going to be going up based off of their numbers, based off of projections and everything else that I done research on with this company. But again, that's why it's important to understand a lot of things when it comes to which companies you are investing in, because when they go down, you should be excited to want to buy more of them, because at that point you're getting them for a cheaper price, believing in that they're going to increase their prices. Obviously, nothing's guaranteed. Even the best of companies can just wither away at time, or in time. So just always be vigilant in that regard. But for me, I like doing that. I like doing it where if a company is down and I've already wanted to invest in them, that just means I'm getting a discount. Because if on average I was paying $188 per share because I have about 8.4 shares total, that means the next share that I'm buying, if I could put in that much or if I put in whatever amount, I'm getting it at a discount. And I like discounts. I like saving money when I can and not spending money when things are at their peak. So we talked about how Microsoft at the moment is pretty much at their peak. So I'll show you the opposite effect, right? So currently I have about 13.35 shares of Microsoft, average share price of $215. Their market price right now is $261. So if I buy more shares, my average price is going up. So it actually cost me more money to buy it today than it did buying it over the course of time up to this point. So kind of just something to consider. Like I said, it's a really tough thing to do when you are a new investor, to see the stock go down after you put money into it. But if you keep buying in, most times it ends up yielding really good results because you're getting those discounts and then prices tend to go back up. And when they do, you can win. But keeping in mind that that could be weeks, it could be months, and sometimes it could be years. That's not always the case. I don't see too many stocks that, at least that I have, that I've taken years to recover, but that could be a case. Actually, let me show you one stock that had done that, and that's Chipotle. So you guys have probably heard of Chipotle before. So I'm going to show you, let's see, 10-year marker. Okay. So they had like that whole like crazy situation back in 2015. They hit a high of $7.1864 per share. Like that was really crazy. So then they dropped down to $4.48 because of all the crazy news, and it just kind of stayed relatively steady, and it dropped even more all the way down to $2.51, which is pretty insane if you think about somebody who bought at the peak here and then, you know, saw their stock value go down to $2.71. Like, you lost a lot of money if you sold, right? That's the problem. People sell when the stock goes down. But if you believed in the company, you saw their numbers and you saw what they were doing with the whole situation, and you stayed with it, they went as high as $1,579. Whew, that is pretty crazy. So if you were somebody who bought at the top, which for some reason it feels like most of us end up buying at the top, and then the stock goes down right after you buy it, you know, for those people who sold during this time period right over here, during this time, lost money, most likely, right? If you bought at the peak and then sold anything underneath, you lost money. Obviously, if you bought way back here and then sold over here, you probably didn't lose money or lost very little. But if you kept buying during this area, if you bought more because you're like, well, I believe in them, and then you get all of this, like that's winning right there, right? Because this peak was what? Let's say October of 2015. So hold on, how much was that again? $7.50. Okay, let's just say $7.50. So right about here. So it was 2015, 2016, 17, 18, 19. So almost 4 years. Like, can you imagine somebody investing in a company that for 4 years was either going down or staying relatively flat, and then finally getting its value back? Like, that's insane. But that's what happens when you're a long-term investor. I mean, if you're a short-term investor and you're investing for, you know, a couple weeks or a month or something like that, I probably am not the guy for you guys to be watching, because I'm boring and invest slowly and surely into these different companies. I just don't want that to go out. But, you know, there's other people out there that like taking that crazy risk and are willing to do it. But for myself, you know, if I ended up investing in Chipotle at that peak and then I just saw that stock go down, I'd probably end up keeping it. The only reason I decide to actually get rid of stocks, there's different reasons for them. Sometimes it has to do with their dividend opportunities for the long term. Sometimes it has to do with the direction the company's going. CEOs change can actually have an impact on, you know, the decision to hold onto a company. So that's why having 24 companies, in my opinion, is a pretty solid one. It might still be a little much, but I do like paying attention to these things. And because I'm doing individual stocks, it puts more work on my end. But again, I like it, so I do that. Where for some people who don't want to do that, I always say, hey, I started off with a ETF, which is pretty much a group of stocks put together, made a lot less work for me, and it did really, really well for a long time. And that's perfect, even if you want to keep that for the entirety of your investing. There's nothing wrong with that. But for somebody like myself, I wanted to dive a little bit deeper, be a little bit more involved and hands-on with my investing. So that's why I ended up going with all these individual stocks, which, again, I'll mention it again really, really quick, is if you want to get started with investing like this on M1 Finance, I'll have that link for them with the free training. You guys can check them out. So with that, let's see here real quick. So Apple's my largest holding in this portfolio by far. So you can see here the value for them is about $4,200. Got about 31 shares. So I'm actually liking that a lot. That's pretty solid amount of shares. I do this really nerdy thing where let's let's go here. So I have 1, 2, 3, 4, 5 companies that I own double digits in shares as far as whole numbers, because I just like doing that. Discover is close there, so I'll be jumping up another number there. And if I go the opposite direction, I have 2 stocks that I still don't own a full share of because their price points are really high up there. But you can see like Google, we own 0.67 shares, about 67% of one share. And then Amazon is 0.56%, or sorry, 0.56 shares, which is 56% of one share. So hopefully sooner rather than later, we can hit over 1 and then have a 1 full share of every stock in my portfolio. So I just kind of like doing those things. And then if I look at the value of these stocks as well too, I think it was 12 last I checked, unless something went down in value. No. So I got 12 stocks that I have over $1,000 in just pure value in them, where if I sold them today, I'd be making over 1,000, not in profit, but just having 1,000 coming back in. And then the other 12 are under 1,000. So hopefully over time, as I keep investing more, all these stocks will get to that point where they have over $1,000 in value, as well as over time getting double digits on all these stocks as well too, which is again really cool. I got one stock that's close to 100. We'll see if that ends up getting there, but that's like the quote unquote cheapest stock out there, which, by the way, in case you don't know, the price of a stock doesn't tell you if it's cheap or expensive necessarily in comparison to other stocks, just because, I don't know, I think it's like Apple's like $100 and something and Microsoft is $200. That doesn't necessarily mean that Apple stock is cheaper than Microsoft stock. It's an interesting whole different situation when it comes to market caps. In case you're not familiar, is that something new you heard? Hopefully you're going to learn more about it, and you guys can check out some videos on like market caps and like price points of stocks, and how, especially with fractional shares, price points are not as big of a factor to me as much as the value that I'd be getting from those stocks. Making sure that I'm not buying at their peaks, that if a stock has kind of been down for a little bit, those are the stocks that I personally love. So I go to seekingalpha.com a lot. You can see right over here. So they have a range right here where it's a 52-week range. So over the last 52 weeks, what was the high point? What was the low point? And then you can see the little circle right here. Those dots kind of indicate where it is. So the closer it is to the center, such as Airbnb, the closer it is to its halfway point from the high and the low. And then if it's all the way to the right, like ABBV here, which is AbbVie, that is getting really, really close to its all-time high, or it is at its all-time high, either way. So when you like go down this list, you can kind of see like, okay, some of these companies are standout of not having been close to their 52-week high right now, and then you can see other companies that are, pretty much right there at their 52-week high. So for me, when I look at these numbers and I look at my portfolio, I say, hey, can I get more into these companies that are not at their 52 weeks high right now, because I might be able to get more value out of them if I believe in them long term and want to get more value out of them. So that's just kind of the way I personally like to see it, and get some really, really good value when I put in my money. Because if I'm putting it at the peak and then it drops, just like most people, sometimes I'm like, man, if I only waited just a little bit, I would have gotten at a better price point. But for me, being in the market is always better than trying to time it. So it's not the worst thing in the world if I buy and then it goes down a little bit, because I'm in it for, 10, 15, 20 years kind of thing. So it's going to be totally okay and no worries as well. Now, like I mentioned earlier, if you are interested in checking out this M1 Finance training, I'm going to have a link for it in the show notes down below. Just click that link and it'll take you right to that page to get started. Now, if you want to keep on watching more content here on the channel, check out my video right over here to keep on watching. My name is Dennis, and I'll see you in that next video.